What's up, everyone? Nick here with TradeSpace.io. I'm going to do something a little bit different today. I've never done this before. I'm really excited for it. So instead of posting the watch list just to the Discord, I'm going to do it through video format this time, and I'll still post some of the other relevant information as well. Quick note before we get started, I'm going to make this public for everybody, this video, later this week, but for the time being, if you're watching this on Sunday, then you're a premium Discord subscriber. If you're watching it another day, then you're not. And so you can see just kind of how things went. So this is our general watch list, and we do this every single week. Every single Sunday I post one. So let's see what we have here. Starting off, I called out Costco pretty early on, and Costco is doing kind of well. I know there were two trades that I called out kind of early on in the week, and I didn't really give a lot of reasoning behind them. So here's that reasoning. The first one is Costco, and if we look at our chart here, Costco, if we take it long from 612 to 619 with a 6% stop loss, we have a 78.4% probability. Our average profit is relatively small, but we're on a tight trend, and I feel like we could get a little bit more than average profit out of it. Average loss is also very small. We'll win 12 times in a row. We only lost once, and our most recent loss is 2023. So basically what this is saying here is that if you take this trade long between these dates, this has never lost twice in a row. So Costco's been around, I don't really know how long, but in the history of the stock, buying on 612 and selling on 619 has never lost twice in a row, and it lost last year. So that's something, you want to talk about a lot of probability. You can safely assume that this trade has more than a 78.4% probability. There's different mathematical formulas that you can choose to kind of determine an exact probability with that. We're not going to go too much into it because, frankly, even if the probability was only 78.4, that's still incredibly good. So when I saw it, there's just kind of, when I'm running this algorithm and I'm looking at it and I see it, there's sometimes things happen in the moment, and this is one that I've been watching for a while now, but I wanted to wait until after FOMC to actually enter anything. So that's the kind of historic reasoning behind trading Costco. And now we need a reason based on the charts here. So I'm actually going to skip over to, in fact, you know what? I just want to show you how bullish Costco is. If we go to a monthly chart here, Costco is on such a strong trend that it has not closed under the 20 EMA since, oh my word, 2009, guys. February 2009. February, March 2009 was the last time that Costco fell below the 20 EMA. So this is one of those stocks that you can really kind of buy and hold for long term, and it's something that I may be talking a little bit more about for our investor signals. We also have that. So if we look at the weekly, once again, we see some key signs of a strong trend. Note the push up here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 12 bull bars in a row here, and 13, 14, 15, 16, 17, 18, 18, or was it 17 out of 19 here are bullish. So that's an incredibly strong bull trend. People don't like shorting this. And then look at the pullback that we have. Pullback that we have ended up climactic bear bar, climactic bear bar, climactic bear bar in a tight range. You can think of it as an implied inside bar, and so that means that there's going to be a breakout soon. Breakout is more likely to be bullish, as we've seen historically. That's what we had. We had a big bullish breakout. Something similar is happening here. Here's a consolidation. And this is a triangle, or it's a flag, really, because of this context here. And these are some kind of old lines. I'm going to get rid of some of these really fast. We've been trading this for a while now. But you see we have this big bullish push up here, and then we end up in a range. And look at this pullback. Once again, we saw it on the weekly chart. We're seeing it on the daily chart here. It's very small. It's very light. And it's consolidating too. So you can think of it as a triangle. You can think of it, you can think of it as a flag, but it's probably best more to think of it as a triangle. This is the daily chart, but we know that if we have a bear bar closing at its low here and a gap in between on some chart somewhere, most of this price action is an implied inside bar. So it's more evidence of consolidation. And then once we finally have our breakout, let's look to see kind of what's happening with the breakout here. We have lots of bull bars in a row. An inside bar, which ended up being a pullback. If you trade one-on-one with me, then you probably understand about inside bars and how it's really a breakout pattern. OIO, IOI patterns, price action patterns like that. This is our breakout bar. We had a nice breakout bar. And we have this really, really nice trend up. And throughout this trend, one of my favorite things is actually this bar right here. It pushed down and tested the 20 EMA, and there were limit order bulls exactly at the 20 EMA, which bought it right back up again. So this is its first 20 EMA test since the breakout of the triangle. The more it tests the 20 EMA, the weaker it gets. This is a really impressive first test. I see no reason to believe why we will not be going higher. Now, with that being said, we do still have some consolidation in here, and so we are going to kind of have to see what that looks like. We have a breakout to a new high with Friday's bull bar. With that being said, though, it didn't really have like a super strong close. You know, it would be closing maybe up closer to this line here, this 859-ish level here. It'd probably be closing higher, closer to there if it was like a super strong breakout. So that tells me that even though bulls are clearly in control here, it makes me wonder if there's going to be another day or two of inside days before a continuation. So kind of be aware of that. We may have some inside price action here. And if we do, this inside price action is really just buying opportunities. So we will be looking to, we're already in this half size, we will be looking to add more to this later on. Okay, so that's pretty much a summary on Costco. I have quite a few to go through, but I also want to be sure to give everyone all the details. So the next one is Host Hotels, and if we take Host Hotels, we take it short from 617 to 628 with a 6% stop loss. We have a 73.2% probability of winning, 3.41% average profit, consecutive wins, 14 consecutive wins, 3 consecutive loss. And this has been a winning trade ever since 2009. It hasn't lost since 2009. And even though we can look at this and say, well, it's a little bit scary when a trade hasn't lost since 2009, but the average consecutive wins is 4.28. So you're probably over here thinking, well, this trade is way overdue for a loss. And sometimes it's okay to think like that, but in my experience, what I've come to find is that if something is winning like that, and winning so consistently and so often, you just have to take it. You just have to. Because at the end of the day, the probability of you winning is so much greater than the probability of you losing, no matter what. Markets also have inertia, and they tend to like to do the same thing for a fair bit of time. Something to also think about is that though the the reasoning behind why Costco is so bullish between these dates, or why Host Hotels is so bearish between these dates, um, the reason why for that is oftentimes unknown, but it has generally has something to do with financials. Costco is doing well for some reason because they have a habit of doing something in the summer. Rather, people just tend to go to Costco more in the summer, and they tend to not want to stay at host hotels so much in the summer. Maybe their costs rise a lot in the summer. I don't know. I don't know the internals of their business, but there's a reasoning behind why this happens on these dates each and every year. So when you think about that and you think about the fact that we haven't lost since 2009, it's really something that we have to take. And we know too that historically we can win this 14 times in a row. So I can kind of understand maybe if you had reasoning if this was about to be number 15. Uh, I can understand some reasonings, why you wouldn't want to take that. But I want you to notice I'm filming this on Sunday 6/16, and our entry date is 6/17. So I did call this out early, and I'm about to explain why. Let's go to host real quick. Okay, so we entered on this bar here, I believe, 612. I called this out really, really early, but let's look at the weekly. I like to use the weekly just because it kind of helps to zoom out some. And we can even go to the monthly and zoom out even more. We see a lot of weakness in price. A lot of weakness. If you're a bear and you sold here and you sold a new high, you made a fair bit of money. If you're a bear and you sold here, we came down a little bit and you sold here again, you would get out break even. Or if you sold here again, you would probably have the ability to be making some more money. Notice too, this 20 EMA is not strong support, so even though that we are coming down to it, this has not been very strong before. And we can assume, because we see that it's happened before in this price action, we can assume with a relatively high probability that a bear who sold here or sold here is going to sell more up here. So it's not like bears don't, it's not like they don't have any control over the situation. They are definitely getting control. Quick review of the monthly. Weekly, we have a tight channel pushing down. Little bitty bull bar kind of pushed up to the 20 EMA. It didn't quite touch it. I kind of wish it touched and rejected, but no, setup is perfect. Go to the daily really fast, and this is what I really want to look at. Webull always does this. Not interested. Not interested. We have a channel working down, top, right, double top. You can say a triple top, or you could say it's a double top with a micro double top lower high. And you could even say this is a double top lower high here. We have lots of different tops, lots of ways to think about it. The point is that this area in here is very clear resistance. The bears had a lot of selling happen there. And we have our initial breakout. This is our initial breakout here. 1, 2, 3, 4, 5 bear bars in a row. And if we look at how this broke out, it had a pretty good breakout. It did have breakout, gap up, breakout, gap up, breakout, gap up. So it did create a bunch of gaps, which of course the bears did fill and have maintained. This kind of refilled those gaps for the bulls. And it also rejected the 20 EMA. And that's going to be important to note because this is the bulls trying to buy back and get back in, break even. And I'm not really sure if they were able to do that, because if you bought in here as a bull, if you bought the very bottom and you bought again in here, there's no overlap. This wick right here did not get to the bottom of this range or of this consolidation here. So I'm not really convinced that bulls were really able to get out of this break even. And if that's the case, then not only do they take a loss, but they will not sell again for or they'll not buy again for quite a while. And I think that's evidence in some of these bars. So we look at just this area in here. Let's look how many bull bars there are. Look how many bear bars there are. I don't really need to count them out to tell you that bears clearly have more selling pressure than bulls have buying pressure. We sold on this bar here, and the reason why I called this out so early, and the reason why I wanted to get in this is because of frankly, this is the first time we pushed above the 20 EMA. When we have a strong breakout like this, we don't even believe that bulls were able to get out break even. We have the strong push down. The first time we're above the 20 EMA is likely just going to be a selling opportunity, and that's exactly what it ended up being. We're kind of already at our average profit right now. I bought put options. I didn't sell shares, so I don't know the exact math on that in the moment. But my put options are up over 37% right now. I imagine if you just sold shares, you're pretty close to our average profit. The way I would treat that is I would just continue to hold. Really, I would probably just do all or nothing. If we do look at this though, and we've seen that this is really bearish, but we need to look at this on the bullish side too. For bulls, there is some support here, and yes, we are selling at around a support. With that being said, though, there's not a lot of evidence that this support is strong, so I don't really believe that it is. What I would do here is, if you wanted to sell more, I would wait for a strong close below 1754. And if you got that strong close, you could sell again, betting that the bulls here haven't stopped out again. And I do overall anticipate that happening. I think the best the bulls can get is a range. And if the best the bulls can get is a range, then that means that any sort of scaling in that you do, you'll be able to, there's a high probability you'll be able to at least get out break even, no matter what. But with that being said, though, I think this is a really high probability trade this year. I did buy options contracts for it, so I'm excited. Okay, and our next one, scoot down a little bit here. Next one we're looking at is Nike. So Nike has a lot of good stats on it, but it's not necessarily the one trade that I'm looking for, so to speak. Start from here. So these are old markings. I haven't done any sort of markings for Nike, but we'll go to monthly here. You can see that we've had a wedge pattern, 3 pushes down, 1, 2, 3. So we're looking for a reversal here on the monthly chart, on the weekly chart, and really on the daily chart too. And I think this consolidation in here, this triangle, may have been some of it. The reason why I'm not just that big of a fan of it is just because I wish that there was greater evidence of bulls buying in here. There's a lot of bear bars in here. A lot of bear bars still. So the other reason is that you kind of have to have a wide stop. How long is a trade again? Let me look real quick. 617 to 715. It's kind of a ways. So, I mean, doing this, you kind of want to have your stop down below 88.42 in order to be able to stay in this trade and be able to scale in if necessary. So, probably not one. If you're an options trader, of course, you're more than welcome to buy an option for this. I don't think that I will be, though. I think I'll just be buying shares. What I want to see here is just some support on the 20 EMA, or if it drops down below like it has here. I just want to see a little bit of support and a nice little push up. And that'll be enough for me to take at least a small position. And, small position it's fine. I can always deal with a small position. If you're not confident in something, you have the account size, you can just take a small position just because you never know. You don't really want to miss out, but you don't need to be risking a lot of what you have for it. So if we take Nike long 617 to 715 with a 12% stop loss, so kind of a wider stop like what we were just looking at, you have a 70.8% probability of winning. Now, the things I do like about this trade, you have a big average profit. You have a somewhat, I don't know, it's an interesting average loss, I'll just say that. You'll win 9 times in a row, you'll lose 3 times in a row, and your most recent loss was 22 and 23. So this can lose again. But with that being said, every single time that it takes a loss, so it's had 2 losses in a row now, the probability of it winning the next year increases. So it took a loss in 22. The year 23, even though it lost again, the probability of it winning was higher. It did lose in 23, and so we can assume that the probability of it winning again this year is even higher than it was in 23. Now, I don't really know, there's not really an exact science of how you can calculate that. Probabilities are very tricky, because it's all probable. But you can think of it like that, and you can come to realize it. And even though you don't know the exact probability, you do know it good enough. You know that your historic probability is 70.8. And if that's all you know, then frankly, that's enough. But you can also look at things like your average loss and realize that your probability of winning this year is probably a little bit higher than 70.8. So it's just something to look at and consider. Pretty quick on Nike. Let's move on. Okay, 2 more to go, guys. Knock. Good old Grumman. So I'm actually really excited about this trade. And I'll express some of the things that I like and don't like about it. So we're looking to take this short. Let's look at the historical facts first. If we take this short from 618 to 626 with a 6% stop loss, we'll have a 77.3% probability of winning with a 2.74% average profit. So not a very big average profit, also not a very big average loss, but we'll win 13 times in a row and we'll lose 2 times in a row. And it lost in 21 and 22, and so naturally, so that it didn't break anything historically, it had to win again in 23. So it was a winner in 23, and this year, because we just had our 2 losses, we probably have a little bit higher probability of it winning again this year, just based on the history. We do have a pretty good amount of consecutive wins. We're within our average consecutive wins here, and it makes sense for this to be our average consecutive loss. We had 1.25. We exceeded it with 2, and so we can assume that we have about 2.77 more wins left until maybe this starts to look relatively weak. So everything is lined up logically in the actual history of the trade. And then now let's look at some price action. Zoom way out. So once again, I'm not going to go over it too much, but a bear who sold here, who sold here, who sold here, bear who sold here or here or here, they all have the ability to get out break even. And a bear who sold here, or if this wedge 1, 2, 3 wedge, first leg down, uh, you could sell again on this double top. We're probably going to break this 407 mark. And if that's the case, then it's probably going to be the second leg down on the wedge. We could get to this high or this previous high here, this double top. We could get to this, which is the previous major lower high, which is also a profit target. They're all in the same area, so it'd be reasonable to say that price could get to this area somewhere. Probably had the first leg down on the wedge. Pretty good entry for the second leg with the double top. Did we break yeah, we had broken the neckline on the double top. So this is a decent time to be selling. If we zoom way out and look at it, we have some consolidation here. We have a climactic bull bar too. Big gap up. Climactic bull bar was not able to. Bulls could not keep up here. So bears are definitely having more selling pressure. This was also the initial breakout here. Lots and lots of double top here. It's really just arranging double tops though. Trying to mark where support is, and it's very dynamic support too, right? Because it was like in here and now it's up here. So there are bears trying to scale in higher. So this could potentially be a really good trade. We might have some buying action in here. It'll probably be limited. Let's go to the daily, which is what we really want to look at. We see we have a range. We have a range all in here. Range right here's the bottom of the range. Yeah, bottom of the range in here. And then we have a break of the range. We have our wedge up, right? There's 1, 2, 3, or you could think of it as 1, 2, 3, which is what it is on the weekly chart. On the daily chart, it's like 1, 2, 3, then the major 1, 2, 3 on the weekly. And here we have this really, really tight bear channel. 1, 2, 3, 4, 5 bear bars in a row. And some very minor buying here. You know, bull bar, it's an inside bar. Any push down is a nice sell. And this created not only the original breakout, but a tight channel as well. And what's our general rule when we have selling pressure coming in, and then maybe we have a range like this, and we have a breakout with a tight channel? The probability of the first reversal up succeeding is extremely low, very, very low. So we know that the first reversal up is likely going to fail, and we can sell a low one. So what we're really going to be looking for then is to sell a low one. It's probably going to gap this 20 EMA, but I think it'll be okay. I don't think I'm too worried about selling a 20 EMA gap. I think the important thing to remember here is just the scaling in factor, because we are selling kind of low. I plan on waiting Monday and just kind of seeing how Monday turns out. And then maybe Tuesday as well, Tuesday or Wednesday, and then look to sell, because if I can get 2 or 3 bull bars here before we really get a signal bar to sell, then I will probably be, I'll be pretty happy with myself, really. So, quick little review on NOK. I think it's a really high probability trade this year. It's just, you got to be careful with this timing. All right. Last trade that we're going to look at today, guys, is natural gas. We're looking to take natural gas short, 617.75, 6% stop loss, has an almost 80% probability of winning. 80% probability is a lot. It's quite a bit. Your average profit is 8%. Your average loss is 6.33%. You'll win 13 times in a row. You'll lose 3 times in a row. Most recent loss was 19, 20, 21. Still within our average consecutive wins, and we exceeded our average consecutive loss there, so maybe we'll exceed our average consecutive wins as well. We'll see. Not, any too high probability dates that don't land on weekends this year. Um, but generally speaking, just shorting natural gas just at almost any time is a really good trade. Now for this one right here, I'm actually going to be looking at cold. Cold is a natural gas bear ETF. So by buying cold, we're shorting natural gas. I have a bunch of lines on here. I have almost no lines drawn for this video. I'm also doing this work on like 3 different computers, so I have a bunch of lines on all of them. But we can clearly see that there's a range. You know, range in here. I think that if I can get this line to move, this is going to be our range right in here. Our range is going to look something like this. These are just extremely long lines. Don't worry about the extremely long lines. So with that being said, we're at the bottom of the range. It is, let's see, this is the weekly chart. So it's 1, pull back 2, 1. So the next push above this bar here on the weekly will be a second entry long. It'll be the second entry in the range at the bottom of the range. So that could end up really nice. Daily chart does show some support. We bounced off of here once. We pushed up to the moving average, rejected it. Now we're starting to show a lower low here, and this might be a lower low trend reversal. And we'll kind of see how it goes. The bull bars right now are a little bit small, but they are bull bars, and there are 3 in a row at a previous support after a lower low and a test of the 20 EMA. So I do think that the probability of us getting above the 20 EMA, if nothing else, is going to be really good. I will kind of look at options volume for this one to see if I actually want to trade the option or not. But this is a pretty ideal place to buy because we can have a tight stop. Our take profit is going to be really large. It's going to be at the top of the range or by the end date, whichever one comes first. And I think that this trade has a pretty high probability of winning this year. Remember, going long cold is shorting natural gas. You can short the natural gas future. You can buy a call option for something like cold. I think, if I remember right, I think heat is, let me check real fast. No, it's not heat. There are other natural gas bull ETFs. I don't pay a whole lot of attention to those though, because natural gas is primarily short. But you can do all sorts of things. You can trade an option here with an ETF. You can sell natural gas. Lots and lots of different options here. Okay, guys, so that's a quick wrap up of what our watch list is going to look like this week. Now, if you have any questions, feel free to shoot me a message at any time. I'm happy to answer them. You can also post a question to the Discord, and I'll be happy to answer it there. Really big week the last couple of weeks, guys. So big congratulations to our winners. We're doing really well, and best of luck this week, guys.